Hi everyone, welcome to 2024, where we'll be discussing our 2023 annual letter and how the year went. Our High Growth Fund and Pure Hedge Fund had a strong 2023, with High Growth delivering 15% and Pure Hedge 12%. I'm also pleased that this was again delivered with low correlation to the overall market and with lower volatility than the JSE. If we put ourselves back to the start of 2023, there was a lot to worry about. Inflation was sitting at close to 10% in most developed markets, and rates were going up rapidly, heading towards 5%. In that context, the year ended up quite a surprise, as inflation came down quite rapidly to around 3% right now, and the high interest rates had not yet slowed down economic growth materially. The US still grew 5% as at the end of Q3, and Europe and the UK managed to stay out of recession. This ended up delivering quite a strong year for global markets. South Africa always has some of its own specific challenges, and I'm going to ask Justin to cover some of the specific challenges SA faced and how that impacted our portfolio and markets domestically.
Well, I think at the beginning of 2023, we entered the year with load shedding at its peak. We were in stage 6 to 8 load shedding for most of the time. The environment was pretty depressed and depressing. Share prices of the companies were under a hell of a lot of pressure, as were the earnings of those companies. So it really wasn't a pretty picture. As the year moved forward, we did quite a lot of research, which we presented in our half-year review, where we spoke to the fact that we expected load shedding to improve as the year went by. So we're pleased to report in the second half of the year, we did see a material improvement in the load shedding outlook in South Africa, mostly a function of improved plant performance at Eskom, some of the new plants coming back online at Medupi and Kusile, as well as the massive increase in private sector generation that is really going to be the thing that gets us out of this hole that we're currently in. So we expect this trend to continue in 2024 and into 2025. So hopefully load shedding will eventually be a thing of the past insofar as the South African companies and outlook is concerned. We still have our challenges. Transnet is still a massive problem for South Africa, as is water, crime and corruption and the policing environment. And I think those things are quite challenging to try and address. But despite that, we remain quite optimistic about the companies that we're invested in South Africa, as well as the valuations where they are currently trading. So it is not all doom and gloom, and we remain on the optimistic side of the South African context.
Thanks, Justin. I think what's unique about our approach is that you can almost give us any kind of global or local macro environment, and our philosophy and approach goes and looks for opportunities in that market. So what was nice in 2023 is that our return really came from a variety of different opportunities. I'll just give an example that the bank sector, for example, has been a consistent winner over the last 15 years for us. There was a nice entry point in the banks during April, May, when the peak load shedding happened and everyone was bearish, as you touched on. And I think we navigated that sector nicely, owned the right shares, and they did well. And then I think pleasingly, after being a big negative drag last year, Facebook or Meta had an amazing year, ended up 200% for the year, and that was our biggest winner for the year. So I think it's quite nice to see a broad base of winners. And I think there's one specific interesting winner that really touches nicely on our approach of finding ideas that are not correlated with the overall market, and that was Fortress Property Fund. And Justin, you did a lot of the work on this one. It would be useful if you give us a bit of context around the story.
So Fortress is one of South Africa's biggest property companies. It has got 2 shares, an A share and a B share. The A shares have got the first right to income, and the B shares effectively receive everything else. Now, what happened during COVID is the rental income generated by Fortress was decimated, and the company wasn't able to generate sufficient income to pay even the A dividend to shareholders. So eventually Fortress lost its REIT status, its tax exemption, and that resulted in many market participants deeming the company to effectively be uninvestable. We saw this as an opportunity rather than a threat, and we decided to build a massive position in our funds in both Fortress A as well as Fortress B. However, we knew that in order to unlock this trapped value inside the company, we were going to have to eventually find a solution for the capital structure, where the capital structure was dissolved in its entirety and Fortress was left with one share. So we set to work, owning a big proportion of the company at that point in time. And we designed two specific structures which we believe were going to work and which shareholders might deem to be win-win solutions. We took those solutions to shareholders all around the country. We spent many, many hours and phone calls discussing these solutions with the largest shareholders and even some of the smaller shareholders of Fortress. And eventually we thought we'd come to a head where we found a solution that everybody was somewhat happy with. We took that to the board, who then kicked for touch again and said to us, guys, we need written letters of support from you in order to present this to shareholders formally, which we then went and did in about September last year. So after getting approximately 60% of pre-approvals from shareholders, the board was confident enough to present this to shareholders in about November last year. We're pleased to report that after months and months of slog and toil, the share scheme, or the scheme to collapse the two shares, was eventually passed on the 19th of January by 95% of Fortress shareholders. So Fortress ends the year, or will enter the 2024 financial year, as a dividend-paying property company, as was always the intention, with one class of shares. So we remain very big shareholders in Fortress, despite having unlocked significant amount of value through this transaction. And we look forward to partnering with a very talented and motivated management team in the year ahead as we move forward with Fortress.
Thanks, Justin. I think this ended up being a real win for the company that now has one share class only. And if I look at the value of the A and B shares in Fortress versus a year ago, I think it's also ended up being a massive unlock for shareholders. So it's a real win for all parties involved. Well done, and I think we can be pleased with what we achieved then, and hopefully there's more good things to come. If we look ahead at 2024, I think there remains lots of uncertainties in markets. We've got 2 wars on the go, geopolitical tensions is rising, and it's still to be seen whether the higher current interest rates are going to materially impact economies with the time lag they normally do. But I think you can trust assured that we're going to apply our process and philosophy consistently, and hopefully this year continues to generate exciting new opportunities for us to generate absolute returns for our investors. Thank you.